Welcome, it's denome. This is the crazy yield farming attempt, second attempt of yield farming, and today we're doing it with YFValue token or YFV. And as you can see here, I currently have a little bit of YFV, as well as you can see the pools here. And the first thing that you note here is the high APY. So this is the annual yield. So on this stable pool, if you just deposit stable coins here, you can earn 300% annual yield on those. And of course, if you take a look at these yields, they are super high, and no way they are sustainable. So in this video, we're gonna cover the risks as well as the potential, and I'm just gonna be as neutral as I can. So take that into consideration. So before I talk about the history and all that, and the team and everything, I'm just gonna let you know how it works. So here, what you can do is simply, like I have currently received 6 YFV tokens here on KNC balancer pool, as well as 1 YFV from BAT balancer pool. So let's just open this KNC balancer pool so you can see how it works. So this is my pool tokens which I have staked in this protocol, and the next epoch is in 4 days. So the next rewards will be paid out in 4 days, and this is my estimated 24-hour reward of YFV, and here you can see it accumulate over time. So I can claim these rewards every now and then. But this is the problem once again, is that whenever you claim these rewards, there's gas fees that you have to pay. So the current gas fee just to claim the reward is $11. And to get these tokens into the pool, the actual cost for me was like $70, or like everything included. So just take that into consideration if you want to get started with this one. And the rewards you get is you get the YFV token, as well as you get something called vUSD, as well as a vETH. And I'm gonna explain later on in this video what those mean. But basically, that's all you can do here. You just put your money in the balancer pool. So you just click this button, and you will see this screen right here. And here you can see the token distribution if you want to provide liquidity in this pool. So you provide KNC with 98%, as well as 2% of the YFV token itself. So you have to buy some YFV to actually participate. And then you just simply add liquidity here, and you can remove a liquidity here as well. Let me just move that. So here you can remove it as well. Let me put it back here. All right. So that's basically how it works. You simply put it here, and then you come back here and you click farm, and then you deposit the balancer pool tokens into the protocol, and you start earning these YFVs, vUSDs, as well as the vETHs. And now let's just talk about how everything works and if it's sustainable or not. So first of all, of course, it's not sustainable. And the second thing is that is it profitable? Currently, yes. So if we take a look at the price of YFV token, and we go to the max, you can see it's been around for more than a week, which in of itself is an achievement already. So it's been around for a week, and we'll see how everything works from there. I was able to pick it up at about $11, and now today, just like 24 hours, it shot up like 200% up. So let me, yeah, 200% up. So that's the crazy yield farming. People want to get these, and once people start earning the rewards, of course they will dump the tokens into the market. So that's a little bit annoying. But let's talk about the supply and everything, and how everything works. So they have this blog post here, which was released in August 17th, and you can see that you get referral bonuses. There's governance here. It's a DeFi yield aggregator. So it's supposedly trying to find the best yield available for your capital, but I don't know if that actually works, because as far as I know, you just put it in the protocol and you get these 3 different tokens as a reward. So I don't know, does it actually aggregate anything? And yeah, they have the elastic supply stablecoins, vUSD, as well as vETH. And how do you earn YFV is simply you put it into one of these pools, or you stake it, or you put stable coins into the stable coin pool. And here's the token distribution on these different pools, as well as here are the rewards. So depending on which pool you want to put the money in, there's more token distribution on these different pools. So for example, Link pool has much more YFV tokens distributed through that pool compared to like BAT pool. And there's only going to be 21 million YFV tokens in reality, in its history. But for now, as far as I know, there's no plans in the future how they're actually going to do. Like once every YFV token has been released, I don't know if there's anything actually valuable that's backing the value of YFV tokens. So for now, everyone is just FOMOing in. So is there anything like once the rewards have been mined, what will keep the value of YFVs up? So that's another question, which is very important to ask, because like when I'm just looking at this, I don't see how it can be sustainable in the long run. But let's just go on with this presentation here. So 1 million vUSDs and 1,000 vETHs are going to be distributed through the yield farming method, and there's going to be a price oracle that tries to balance the vUSD and vETH prices to the like the price of USD and the price of ETH. And there's going to be a rebase occurring every 24 hours with this vUSD as well as the vETH. So basically it's sort of like Ample was, but the tokenomics of these vUSD and vETH are a little bit different. But basically they just try to copy the price of USD and ETH. So that's how those work. And they say it's fair, so the creators didn't take any funds for themselves, so they started farming just as everyone else. So that's basically they copied from YFY, which is the Yearn Finance protocol, which is quite big already. I think the token price is $20,000 currently, and there's only 30,000 of those tokens. So they copied a lot what they are currently doing. And then there's the referral bonus. So if you use my link, I will get 1% of the rewards that you will make. But if you don't use my link, then the referral fee will be burned, and you can refer other people as well. So if you use my link, that's basically what will happen. There's no benefit of you using it. And of course, if you want to use the link, just be careful. Know that there's risk, because if we go down here, you can see that there's no audits. So the code that the smart contract that you put your money in, there's absolutely no audits. So people just FOMO in, and just want to show you this one more thing here, is that there's already $240 million worth of funds locked in this protocol. So a lot of people, they have a lot of trust in this protocol, and there's some notable YouTubers even who are part of this governance. So that's very, very interesting. But now let's get back to this one. So this is the risk, is that first, it could get hacked, it could be scammed, and the final thing is that the value that you get, the APY, can actually crash at any moment in time if the interest for these YFV tokens goes lower. So it's basically just the farmers, they are dumping these YFV tokens every now and then when they get it, as well as people who actually want to buy these YFV tokens. They only want to buy it because they think the value will go up. But there's no, like, there's governance for these YFV tokens. So you can vote in different things. It's up here, governance. So you can vote on chain regarding the YFV's supply inflation rate. So there's some votes going on, and here's an example of one vote that was passed. So they were opening staking pool for YFV tokens, so you only supply YFV tokens in the staking pool, and they decided that there will be a minimum of 100 YFV to actually stake in that pool, as far as I know. So there's some staking going on here, and some governance things going on here, but most people are not too interested in the governance because most people just want to get the yield, right? So that's basically how it works. And is it sustainable? Not in my opinion. Is it gonna be here for a long while? It could be, because you never know how these yield farmers want to push the price up, and like they could have some plans here, and you could join their Twitter and the Telegram group or the Discord group and talk with them about the future, what they want to do here. But currently I don't see like a long lasting value here. That's just my assessment. So let's just go to the Twitter here, because there's a few things I want to point out here. You can well, we can take a look at the vision and mission here as well, but there's one thing I want to show you, this one. So the governance keys of vETH and vUSD, and they have been transferred, and there are some interesting guys here like DeFi Dude. He has a nice following on Twitter, as well as Box Mining, and you may know Box Mining from YouTube because he has like I don't know how many subscribers, like 100,000. So he's one of the key holders of this protocol. So there are some interesting people here who are the key holders. I don't know the other ones. So that's also a risk, like if you trust these people or not, because they hold the keys. So that's another thing. But just having Box Mining and DeFi Dude here, those are some names that I personally recognize. So that's interesting. What else can let's talk about the vision and mission. So the vision here is to bring fairness, true value, and innovation to yield farming. But again, I'm not exactly sure how it works. Accessibility, governance, profitability, insurance. So let's talk about the insurance here. Insurance treasury through contributions of the YFV team and the community funds will be used to engage and integrate an insurance protocol such as Nexus Mutual to further reduce the risk. Okay, so there's going to be some insurance, but currently there's no insurance. And also about the audits, I want to talk about that one quickly. So here, they shall consider a proper professional audit in the next phase of the project. So there may be an audit coming up to the actual code. So all of this, of course, sounds very sketchy and shady, right? So if you want to get it, be very, very careful and know the risks before you put anything in. And another risk is that when people use these protocols, the price of Ethereum gas always goes up. And that's what we saw with YAM Finance. When it was hot, the transaction fees for Ethereum went up like $30. So if there's going to be like a rug pull and they just pull the liquidity out of here or something happens, you could basically lose all the money here if there is going to be like a scam. So keep that in mind as well. And yeah, I think I've given enough warnings about this. So research this if you think it's interesting. Of course, the potential here is that it's going to be like YFI in the future. So the value of these tokens can go up. And I would not recommend you to buy these tokens as speculation for price increase. If you want to get in on this, then the best way is just to farm it, because the value of this token could go to zero, and usually these farming tokens, they go to zero if there's no real economic activity that keeps up the price of these. So I would not recommend buying this as a speculation. If you want to farm it, then go ahead and know the risk, and don't complain to me if you lose everything. I just want to show it to you because now its market cap is 40 million, as well as it's quite new. It's still gaining traction. So is it gonna do another 10x or 100x? I highly doubt it, but I'm just farming it for science sake, and because there were some names behind the team that I knew. So just keep this in mind, and happy farming.